Good afternoon. Welcome to the Monetary Policy Stance press briefing. Let us welcome the following Monetary Board Chairman and Bangko Sentral ng Pilipinas Governor, Governor Ellie M. Remolona Jr., Senior Assistant Governor Iluminada T. Sicat of the Monetary Policy Subsector, and Officer in Charge Dennis D. Lapid of the Department of Economic Research. Governor Remolona will now deliver the statement on the monetary policy decision.
At its meeting on monetary policy today, the Monetary Board decided to maintain the BSP's target RRP rate at 6.25%. Accordingly, the interest rates on the overnight deposit and lending facilities were retained at 5.75% and 6.75% respectively. The latest BSP baseline projections show a slightly higher inflation path. Nonetheless, inflation is still projected to revert to the 2 to 4% target range by Q4 2023 in the absence of further supply shocks. While food and transport prices continue to drive headline inflation, core inflation has moderated further, implying an easing in underlying pressures. In addition, inflation expectations remain anchored to the target range over the policy horizon. Average inflation is now seen to reach 5.8% in 2023 from 5.6% previously, while the forecast for 2024 likewise rose to 3.5% from 3.3%. For 2025, the forecast is unchanged at 3.4%. The upward adjustments in the 2023 and 2024 projections reflect the spillovers from weather disturbances, rising global crude oil prices, and the recent depreciation of the peso. The balance of risks to the inflation outlook remains skewed toward the upside. The major upside risks to the inflation outlook are the potential impact of further adjustments in transport fares and higher electricity rates. At the same time, the Monetary Board noted that recent indicators of domestic economic activity pointed to waning pent-up demand, even as the impact of prior monetary policy tightening continues to weigh on credit. Given these considerations, the Monetary Board deemed it appropriate to maintain its pause amid the emerging upside risks to the inflation outlook. Looking ahead, the BSP stands ready to resume its tightening actions in the face of upside risks and potential adjustments in transport fares, potential adjustments in second-round effects that could dislodge inflation expectations. The Monetary Board also reiterated the need for non-monetary interventions, including temporary reductions of import tariffs with calibrated volumes and timely arrival of import commodities. The BSP reassures the public of its commitment to steer inflation towards a target-consistent path over the medium term, in line with its primary mandate to ensure price stability. Thank you.
Thank you, Governor. At this point, we would like to request Senior Assistant Governor Sicat to elaborate on the BSP's inflation forecast for 2023, 2024, and 2025.
The latest inflation forecasts have been revised upwards, driven largely by expectations of higher inflation in the near term and the continued increase in global oil prices. Inflation is seen to average at 5.8% for 2023, 3.5% for 2024, and 3.4% for 2025. Forecasts for 2023 and 2024 are higher by 0.3 percentage point and 0.2 percentage point respectively, compared to the previous round, while forecast for 2025 is broadly unchanged. The upward revision in the baseline forecasts were driven by the higher than expected inflation outturn in August, the higher inflation now cast for September, the continued uptick in the global crude oil prices, and the depreciation of the peso. In the absence of further supply shocks, the projected baseline path shows that inflation could remain above the target range by the fourth quarter of 2023, but will revert back to target range. I'm sorry, without inflation, further supply shocks, the projected baseline path would show that inflation numbers would return to 2 to 4% by the fourth quarter, and then it will revert back to target range by 2024. Now, the risks to the inflation outlook continue to be skewed significantly to the upside for 2023 to 2025. The major upside risks to the inflation outlook are the potential impact of new petitions for transport fare adjustments, higher domestic prices of key food items facing persistent supply constraints, higher than expected minimum wage adjustments in areas outside NCR, the impact of El Nino weather conditions on food prices and utility rates, and higher electricity rates. Meanwhile, the impact of weaker than expected global recovery remains the primary downside risk to the outlook. Thank you.
Thank you, Senior Assistant Governor Sikad. We now proceed to questions from our media friends. We will first accommodate those who are with us here in this room. We will begin. If you have a question, reminder, please to raise your hand and wait for the microphone. We have two on the floor right now. Please state your name and your media organization before asking your question. Thank you. Yes.
Hi, good afternoon. I'm Vitas Lopez from Bloomberg News. Not just to clarify, is the inflation still expected to return to target by the fourth quarter? Or will there be a slight delay?
By the fourth quarter, yes, but not September. Instead, it's probably November, Lou.
Yes.
And so the path itself will be slightly higher. But fourth quarter, yes, back on the target path. And then first quarter next year, first quarter 2024, it will go down. And then because of base effects, it will rise again, maybe to the edge of the upper part of the range, and then settle down within the target range.
Thank you very much, Gov. And the reason for that is still the higher food prices.
Yeah.
Thank you.
Thank you, Vitas. Thank you, Governor.
You can add.
Hi, good afternoon, Governor. Jerome Morales from Reuters. Governor, how much did the Fed's decision figure in the policy decision for today, and how much weight will it have moving forward? Because they had a dot plot that they have one more rate hike. So how will that factor into our future decisions? Thank you.
It figured very slightly. Because the decision by the Fed this morning suggested a bit more dovish stance this year and a bit more hawkish stance next year. So maybe just one rate increase this year instead of two, and then next year, instead of a total of 100 basis points reduction, it looks like only 50 basis points reduction in the Fed funds target. So that means next year maybe a stronger dollar than otherwise, because it's a more hawkish stance next year. But it's going to be very slight in our estimate in terms of its effect on the Philippines.
Thank you, Jerome. Thank you, Governor. We have another question.
Good afternoon, Lawrence Agawili from Philippine Star. Gov, you mentioned you expect inflation to revert back to the target by the fourth quarter. Can we expect a pause for the rest of the year?
Uh, we're ready to raise if the supply shocks are significant enough, is what I can say.
Thank you, Lawrence. Thank you, Governor.
Governor, but maybe just to quickly add, it's worth mentioning also that during the discussion, the Monetary Board highlighted also that the risks are still considered to be on the upside
Yes, yes.
to the inflation forecast, as Senior Assistant Governor Sikat enumerated.
And the big ones are, I would say, transport prices, because there have been petitions for rate increases already by MRT3 and by jeepneys and taxis. And then there's electricity rates, which is very likely to be raised because the Supreme Court has already, the ERC has already said that power companies may pass on the increased costs to their customers.
Thank you, Sir Darius. And Governor, yes, we have another question.
Gov, good afternoon.
Good afternoon.
Kai Ordinario from Business Mirror. I just wanted to ask, so does that mean any rate cuts are already off the table for the year, and for how long would we expect rate cuts to start happening, possibly early next year, or?
I would say rate cuts this year, 2023, are off the table. Yes, the cuts are off the table, but rate hikes are not off the table.
Thank you, Kai. Thank you, Governor. Are there any more questions? We have an additional one from Lawrence.
Gov, on the non-monetary measures, do you have an estimate on what is the impact of the planned reduction on the import tariffs for rice on inflation?
Do we have estimates? It's a complicated issue. So we'll.
Actually, we have not incorporated in our baseline, but that would have an impact of positive effect in terms of reducing inflation rate, to the extent that the tariff rates is approved. Then that would add supply to the market on rice commodity, and that would ease inflationary pressure with respect to rice commodity. But in our baseline, we have not considered it. What we have considered it more are the risks that we have mentioned earlier.
Thank you, Sadhu. Yes, another question.
Gov, good afternoon. Mikael Flores of Reuters. Gov, in the latest BSP projections, inflation is expected to return within the target range by next year. And as you mentioned, rate cuts are off the table this year. But for next year, given that inflation is expected to return to target, how early or how late can the BSP consider an easing of monetary policy stance?
I would say that for now, we see a kind of balance between demand and supply. So we're close to the right level for interest rates. Whether there will be a cut next year, I think will depend on really bad news when it comes to, especially when it comes to output. But I don't foresee any news that's not bad for next year. The world economy is slowing down, but it's a small downside risk.
Thank you, Mikael. Thank you, Gov. Maybe we can take the last question.
Hi, Manny. I'm Manny from Bloomberg. So I just wanted to clarify that. So you don't see anything so bad that can happen next year that would merit a cut Are you speaking for the entire year of 2024, or is that early part? Or
I would say the first 6 months, the first 2 quarters. The second half of the year is a long time from now. So it's hard to guess.
so for the first 6 months of 2024, expect rates to remain where they are now.
I expect rates to be at the level they're at the end of this year. If we raise later, we have a meeting in November. So if we raise in November, then I expect rates to stay at that level for the early part of next year.
Thank you, Gov. Sorry.
Are you considering a hike in November?
Well, honestly, yes.
Thank you, Governor. Thank you, Manny. Is it okay if we move on to our questions sent online? Okay, I'll start with a question from Lance Yu of Rappler. He asked, now that the BSP has set its first ever target RRP rate, can you elaborate on how this will affect banks compared to the previous format? How does this strengthen the link between monetary policy strategy and implementation, as we mentioned in our press release?
Well,
The shift to the variable rate RRP auction was actually just an operational adjustment. What we wanted is to enhance the transmission mechanism of monetary policy, and the variable rate offers another benchmark rate being offered by IBCL, because the volume of RRP transaction is way larger than the IBCL. So we're offering, another instrument by which the bank could use as a benchmark. And we think that it will further enhance our transmission of monetary policy.
Thank you, Sadlu. Any other questions from our online media friends? So no questions daw po. We have an additional question from the floor, yes.
Good afternoon, Governor. This is Keisha Taasan from Business World. Ma'am Sikat, earlier you said that the adjustments for inflation forecast was also due to the higher nowcast for September. Do you expect higher inflation po in September than August, or declining pa rin but still elevated or far from the target, 2 to 4 target? Thank you.
Our expectation with regards to inflation trend, sorry, Governor, inflation trend for September would be still above the target range, but we will see this easing and revert back to the 2 to 4% come November. So we'll see some easing now.
Thank you, Keisha. Thank you, Sadlu. Any other questions? Okay, we'll go to the question sent by Lee Chipongyan of Manila Bulletin. She asked, for Governor Ellie, if you're considering a rate hike in your next meeting, by how much do you think is feasible? A minimum of 25 basis points or as much as 50 basis points?
As I said, it's a rate hike is on the table for November. How big it will be will depend on the data. How bad the data is with respect to inflation, especially.
Thank you, Governor. Thank you, Lee, for that question. Are there any other questions? Okay. So I don't see any raised hand, and there are no questions from our Zoom right now. Okay, sir. I'm going to close this meeting soon. So since we have no more questions, we would like to thank our speakers this afternoon. Governor, thank you. Thank you to all our media friends and those watching us on Facebook Live for their time and attention this afternoon. Maraming salamat po.